Good morning, all. Welcome once again for a session on the highlights of 2012, which show that we are on the right track in the achievement of our medium and long-term objectives. 2012 was a solid year for the group, and a year which points to the fact that we are quite clearly well engaged on the achievement of the AXA Ambition objectives. This is true of the results, and our results are aligned with our expectations because we demonstrated excellent execution capabilities in terms of restructuring operations, reorganizing operations in some cases, a year where the solidity and robustness of the group have been reinforced, solidity of our action plans and of our balance sheet. Why this reinforcement? Because our indicators are showing positive results, our positions are good, and we can here see the return to growth and profitability of a more normal nature, particularly as regards asset manager and the U.S. that we will be covering again. It is also a year where we are pursuing our transformation, and you will see that on new businesses in new geographies, growth will continue to be strong. Along these lines regarding the group's transformation, what can be said? The 2012 performance, as I've just said, is considered to be good. Our group earnings have progressed on constant scope of 2% and 5% if we look at gross earnings. We have gone beyond the symbolic threshold of in the number of clients. We are present in almost all geographies, which demonstrates that our offer is performing strongly. Here, the underlying earnings, and this is very important because this is what feeds the long-term growth of the group. This has progressed this is up 9%. We have here a range which is growth between 5 and 10% each year in a normal environment. And in 2012, despite the difficult context, and also in view of the drop in the interest rates, which impacts a certain number of insurance players, we still have here underlying earnings up 9%. Adjusted earnings are up 28% because we were able to bring in more than we had during the preceding fiscal year. So, of course, our net earnings have stagnated, but remember that last year this involved a certain number of non-recurrent items which came from our divestments and some operations, and this is no longer the case this year, so this is why we can see here very clear progress in this particular issue. Now, the solidity of our balance sheet, obvious in terms of our shareholder equity, 2-digit growth. It is also obvious when we look at debt gearing for a period slightly longer than just one financial year, and we decided finally to reduce this to 26%. Versus 30% in 2009. And we are very close to our targets. Solvency ratio, measured according to Solvency I, which is still the enforced metrics, was by using the measurement methods of Solvency II is also at a high level because, and Denis Devan will tell you more, because it has exceeded 200%. So performance is solid and also results from the fact that we try to build what we call a more collaborative, more efficient group. AXA is a global player present in many, many countries. In order to turn this into a competitive advantage, we need, of course, here to obtain synergies, not just on expenses, but also on distribution of products, on the way in which teams work together. And this is what we've done by creating global business lines in 2010, Life business line under the authority of Jacques de Vaucleroy, and other lines which allow us to strengthen our operations. Jean-Laurent Granier dealing with P&C insurance. And this, of course, reflects the efforts that we have undertaken as regards productivity levels. And the teams working under the authority of Veronique Veil have also contributed to these results and allow us today to face the economic challenges we need to reach by 2015. We have significantly saved on our operating expenses in 2012, and we will, of course, be reaching our 2015 objectives in this field. However, the life of the group is not limited to its P&L and to its results. We also behave like we also demonstrate our capacity for awareness regarding our social responsibility. And I think that our mission greatly exceeds the caricatural view that some people may have when seeing us from the outside. Our profession is much wider ranging. We act upstream and we act downstream. Upstream to gain better knowledge of risks and share that knowledge, and downstream to better repair the consequences of these risks when they occur. And the elements that you can see on this slide demonstrate that through our efforts in our AXA Fund for Research. It is very important because AXA now, over the past 5 years, has dedicated approximately 100 million euros in funding fundamental research worldwide, of which we are not owners, to cover large natural disasters, health risks, financial risks, and the partnerships that we establish with governmental institutions in the prevention of risks, such as the example given here with CARE, and how can we help the populations in vulnerable zones in the aftermath of such natural disasters as well, demonstrates that we have engaged a very deep-rooted policy as regards corporate responsibility and social responsibility. We also try to strengthen what we call our agility, our nimbleness. The economic world that we are experiencing today is specific in that it has a growing number of opportunities, but these require an ever faster capacity to respond. The speed with which client expectations change, where contexts change, make it difficult for many players to survive in this universe. So we try to combine our advantages through our global size as well as through a greater agility in our responses to the opportunities on the market. And you can see what we are doing in emerging economies and through our new businesses. And although this presentation may be a summary, you will see that AXA's exposure to growing economies has grown in its own right and will reach fairly significant levels in the future years. All of this works very well because, as I said earlier on, this year we have gone beyond the 100 million client threshold. We are also the top global insurer, and this is certainly not for the first year. This is for the third consecutive year that we are the top insurance player worldwide. We consider this to be a strength in our group, and we intend to continue to maintain ourselves in this position. Also, we are here on new markets or high-growth markets. And these new markets and high-growth segments represent a totally different environment today in 2012 than in 2009. What do we mean by high-growth markets? Emerging countries and emerging activities, emerging businesses. So Asia excluding Japan, Latin American countries, a certain number of Eastern European countries as well. The emerging activities involve direct insurance through the net, web-based, which is growing quickly. These activities, as regards P&C and life insurance, 4% of the group's activity in 2009. And as you can see on the slide, it was 4% in 2007. 15% in 2009 and 21% in 2012 for P&C. And as regards life insurance, 4% in 2007, 7% in 2009, 17% in 2012. And this within a group still undergoing its development. So you can see that even though today the essential components of our profitability come in from so-called developed countries, the emerging economies are showing strong acceleration. AXA being considered as lagging slightly behind versus some of its competitors a few years ago. We are today in a position where we can begin to fill that gap. In Asia, we are the first international P&C insurer, for example. Symbolic and recent examples here. The joint venture that we have with ICBC on the Chinese insurance market. We had here a life savings business with another partner. We have change partners, and this is ICBC, the first Chinese bank and the first worldwide by the number of its customers. And you can see that between first half year of 2012 and what we were able to do since then, multiply our activity, our business with them tremendously. This also can be translated in the evolution that we want to see happen in our P&C and life insurance businesses. We need here to reposition things. Our earnings in P&C continues to grow. We are one of the group players with the greatest and fastest progress in this area. Our combined ratio today is continuing to improve, which means that development is not detrimental to profitability when we look at life insurance, retirement, savings, protection. We can see here that our agility focus is bearing fruit, increasing here the share of protection and healthcare and health, because these have huge potential in terms of development as regards the earnings that they will bring in. And we can see that the share of this protection and health has progressed by 1/3, as opposed to our savings-based general funds, which in Europe are traditional, but perhaps are less attractive today, both for our clients and for ourselves. So the focus on accelerating the business mix is bearing fruit. This is what I wanted to share with you quite synthetically before I give the floor to Jacques de Vaucleroy. Please retain that 2012 is a year where results are solid and where they allow us to pursue our way forward. Jack, the floor is yours. Ladies and gentlemen, good morning. I'm going to present the main highlights for life savings and retirement insurance. You know that we are present in a little over 30 countries and highly diversified, which is quite significant both in terms of businesses, where you can see that protection and health represent a large share of our activity of 30%, and which is a very balanced mix. You can also see on the screen here that we have diversification as regards distribution networks, with approximately 50% of our distribution networks through general agents and salaried distributors. And this has allowed us to bring in 3.9 billion euros in net inflow in 2012. Of course, this is important through the intermediaries we choose to work with, but it's also a guarantee of robustness, which has brought in 11 billion euros in the services given to our clients in protection and health, and also increase the value of their savings invested in euro funds. I am now going to talk to you about our commercial approach and the evolution of sales versus last year. New business has progressed by 3% in 2012, and as Henry says, this reflects a strong commercial dynamism. Well, our margin on new business is globally at 31%, at a higher level than last year, where it was at 25%, essentially based on protection, health, and unit-linked businesses. I'd like you to remember that this margin is a reflection of an actuarial calculation, and this is not the margin that was in reality brought in every year on premiums collected. The growth in sales can be particularly explained by the strong dynamics in the health and protection products, where sales have increased up to 7% versus last year, are up 7% versus last year, thanks particularly to Asia, including Japan. These products represent 40% of new business in the segment in question, and net inflow on these products reaches 4.8 billion euros. As you know, these products, where we feel there are strong perspectives for development in the future, because the needs of our clients are also increasing, will give us a higher profitability profile than other segments in our business. Unit-linked business sales are also up versus 2011 by 2%, with net inflow of 2.8 billion euros, where we are good in selling our products in the US and Japan and in continental Europe. Dealing with the general fund, if the evolution remains aligned to our expectations and our strategy, which of course here means that in France sales have dropped in France, Italy and Germany, because we believe that in a low rate context, these products are certainly not the best solution to bring in more savings earnings for our clients. Also here we have recorded strong growth of 13% in sales on the variable annuities and other related products, essentially thanks to high performance levels in the US and UK. These evolutions are quite aligned with our strategic plan, Ambition AXA, where we intend to emphasize and our focus on protection, health, and unit-linked products. Now, if we look at the evolution of these sales with a market, from a market perspective, and Henry has already mentioned this morning, we can observe that 83% of our sales come from mature markets, which means that 17% are in fact carried out in growing markets. Now, if we look back 2 years, mature markets represented 90% of new business, 90, and we are beginning to see a change here in the geographical mix as well, in line with our determination to continue to improve the relative share of high growth markets. Now, some information on mature markets, where sales are approximately up by 2%, with net inflow at 2.5 billion euros. France is the greatest contributor, where sales are up 3%, essentially thanks to strong performance of protection, health, and structured unit-linked product performances. Let us underscore that in our complicated environment that you're all familiar with, net inflow in France remains positive at 1.1 billion euros in total. Also here, strong sales in the U.S., up 14%. This is the sign that our new commercial strategy is also beginning to bear fruit. In Japan, particularly thanks to the protection products distributed via the Chamber of Commerce and Industry and agent networks, we can see growth in sales of 17%. In Japan, globally speaking, the margin on new business that I've just mentioned is up 29% in these mature markets. In view now of these high growth markets, globally sales have grown by 4% with net inflow at 1.5 billion. If we exclude Central and Eastern European countries, the growth of sales here is quite significant at 15.5%. It is important here as well to underscore the strong growth in Asia at plus 17%, with high performance levels in Hong Kong plus 14% on comparable scope, and in Southeast Asia, India and China plus 21% on a comparative basis. Finally, the margin on new business is globally at 44% on these markets. Here, our underlying earnings per business. You can see that the highest contributor remains health and protection, stable on constant forex. This can also be explained by acquisition costs and commission levels that are rising, particularly due to the increase in sales in a certain number of countries such as Asia and particularly Japan. Our underlying earnings here in our general fund is also growing strongly, reflecting our selection in the trade areas that we focus on and our rigorous management of costs. Strong progress in the unit-linked results is also satisfactory. It is also interesting to see that protection and health now represent approximately 2/3 of the underlying earnings before tax in life savings and retirement. Finally, to conclude here, the total underlying earnings. What I have just mentioned can, of course, here involve a comparable basis evolution reaching 19%, and this despite the very difficult context in view of the interest rates. These strong results are pulled forward by the United States, growing very, very fast. We are here benefiting from a favorable comparison basis. Since last year, the cost of variable annuities has had an unfavorable impact on the underlying earnings of the country. I would like also to indicate strong performances in France, Japan, and Asia. You can see that Asia is now in 4th position as regards its contribution to the underlying earnings in life insurance. This is also a region where a growth for the future will be very significant, but which already today represents a very significant share of our results. I think that this also is the illustration of our business mix mentioned earlier on, with a stronger focus on protection and health products and unit-linked products. Thank you for your attention, and I'm now going to give the floor to Jean-Laurent Granier. Good morning, everyone. I am going to present the main numbers and results of P&C at group level. First of all, a global overview. Remember that we have a direct presence in over 40 countries worldwide in P&C. We are number 4 P&C insurer worldwide, and we have a earnings of 28 billion euros here, and also which can reach 31.3 billion euros if we add international insurance by AXA Corporate Solutions. The largest here representing 19 billion euros compensation paid out to our 10 million clients in 2012, 6.5 million claims managed in the automobile market in 2012. Also, perhaps an element that is more specific to our business, we have become the first international insurance in P&C in Asia. And particularly thanks to the acquisition of the HSBC and Singapore businesses that we have purchased, putting us in a prevalent position. Also in Europe, with a very strongly developed platform in Europe and in Asia, which is a very strong point for the group for the future. Also here we can see a balance between our distribution networks, those that belong to us, that are exclusive, and also the networks of brokers with whom we work, representing 90% of our activity. 11%, this segment is growing, and our P&C business is growing unceasingly, as I've already said. And I would also like to mention the contribution of HSBC in several regions. Now, as regards the business mix, this is balanced between individuals and corporations. Let's say that the international insurance itself is brought in by the individual insurance contracts, and corporations cover the other numbers you can see here on slide. So this is the general snapshot of our activity in P&C. Now, if we look at how we have in fact evolved in 2012, you can see that total growth on this segment is 3%. Henry was reminding us earlier on of the fact that we've multiplied our business levels by 2, and we, of course, here are at above 30 million euros. If today we add international activities and insurance, we are here, of course, present on high-growth emerging markets, but also in direct insurance. If we break down how 2012 evolved on mature markets, let's say that we have two groups. Markets where business, despite the saturated markets and the economic context, have progressed satisfactorily. 2% increase in France, 5% in UK, 5% in Germany, whereas in other countries we were impacted by the contraction of the market. Also, we can see here a gain of 303,000 new contracts. As regards high growth markets, it's a double-digit number, plus 12%, that we can see here in Asia, consolidated revenue. And in the Mediterranean region and Latin American region, we can see a growth of plus 12% in our business. The direct segment is an important one, and the plus 2% that you can see on the slide warrants more specific information. In fact, we had to restructure specific portfolios in the UK, which of course led to a drop of 17% in the UK, whereas in countries where we are direct operators in France, Italy, Japan, Korea, the business has grown by 9%. And the return to a dynamic position is expected in the UK to restore the same level of progress throughout the segment. Here we can see that over 1,100,000 that you can see here on this slide is broken down in different segments. Over one quarter comes from direct activities, but on mature markets where we are more selective and where our market share are quite clearly stabilized, we are continuing to bring in new clients with 133,000 new contracts, representing 12% of total gain. Now, if we look at our profitability indicators, these are measured first and foremost through our normal business. independent from the developments, from claims managed in the past, and so on. And how can we translate 2012 in numbers, the evolution of our main profitability indicator, which is the current combined ratio, which was at 99.6% in 2011, which is now at 98.8%, representing a good on-track management of our AXA Ambition objectives. This, of course, should be spread to all of the premiums brought in this year, written this year, and this should bring us by 2015 down to 97% on this indicator within the framework of AXA Ambition. Now, as regards the contributions of interior provisions, which is comparable to that of last year, 1.7% in the improvement of combined ratios. This year, the net figure is 1.2%. This, of course, warrants an explanation, because this was impacted by a non-recurrent item, which is reprovisioning that we've had to work on in Turkey on physical damage, which are compensated after a court decision, and this was granted in Turkey by some courts. So we here have had to implement a non-recurrent provision, which now gives us a strong position on the market and will allow us to pursue our growth in satisfactory conditions. Now, of course, both of these impacts, the impact of anterior situations or situations of the past, lead the total combined ratio of the group to improve by a further 0.3 points to now reach 97.6% for 2012. And of course, we're expected here to reach 96% in 2015. This progress is the reflection of the technical precision as regards claim management and underwriting policies that we try to improve regularly by benefiting from the diversity of our business mix in the group, and also drawing advantages from the markets where we have had a long-established presence, and other markets such as Mexico, Asia, China, that are for us very significant future markets. Another point of information, as far as P&C is concerned, we often mention the impact of natural disasters, which sometimes make it difficult to read the numbers. The current results are limited in 2012. This is also something that stems from an underwriting policy which aims at limiting the group's exposure to risk. And here this is 0.4%. It's a drop versus last year. But we also need to mention that adversely, we were more impacted by very rigorous winter seasons in Europe, particularly in France and Germany at the beginning of 2012, particularly due to the frozen pipes in households and buildings. And this, of course, deteriorated our ratio by 0.4 points, which means that globally our performance indicator evolution is aligned with how we manage our portfolio and not so much to exogenous phenomena that are non-recurrent, which sometimes impact our activity in P&C. At the beginning, I mentioned that we had a specific segment, which of course is to be added to the P&C damage, which is international insurance. This is developed by AXA Corporate Solutions, which is another asset of the group, an international corporation serving other large corporations with activities in different countries. It's a dynamic business, but extremely sensitive, requiring high levels of technical knowledge, and to continue developing it in alignment with the development of P&C to exceed the 2 billion euros level. Obviously, one of the growth pillars here is based in the emerging markets. So for the moment, the underlying earnings drops slightly by 3%, whereas net income has grown by 17%. So here, of course, we need to develop the presence of AXA with corporations in these markets, whether we're dealing with the countries in the Middle East, in the Gulf, or elsewhere, Latin America. The activity of AXA Corporate Solutions is profitable on a sector requiring high levels of technical knowledge. Here, of course, we can see that profitability continued to improve in 2012 because combined ratio is at 97.8%, an improvement of 2%. This is perhaps something that can disrupt your reading, but it really is 97.8%. And here, this is the result of underwriting in this field, where I would say that everything depends on the quality of risk analysis and the quality of the underwriting policies. Other than that, our results are stable from 150 to 155. The gap of 5 million euros is here something which is very representative of what the entity has brought in during the year 2012. And we can also see here an increase in the underlying earnings of 1% on a comparable basis and 3% in published data. Here, what is important regarding this activity, which is absolutely essential for our corporate clients, is the capacity to generate recurrent results over the long term, which in themselves are here one of the added values of the P&C business. I would now like to conclude by giving you the general underlying earnings. We can see here a progression of 3%, quite concretely 3.9 billion. Without including the AXA Corporate Solutions 145 that are to be added, of course, you have a breakdown business unit by business unit of the components of this number. I would say that the activities of the group and the geographic regions have all positively contributed. This is particularly the case of direct insurance, which sometimes is a segment that requires very strong attention because we need to develop both the business and the brands that are involved. But here we can see a positive contribution of 50 million euros, and we are absolutely convinced that this will contribute very, very strongly to the growth in this field and in this segment. Also here, beneficiary margins come from the efficiency of our operational strategies through the expense ratio analysis. This is now at 26.8%. This is further improvement versus last year of 0.2 points, and which of course positions us in a highly competitive universe with a positioning that was better than the one we had in the past. And this quest of greater productivity and operational efficiency is far from over, which means that we intend to continue to improve this operational efficiency approach to strengthen our competitiveness on the markets where we are present. All in all of these results demonstrate that we have implemented what we had committed to implementing. Now we are in a position where we can accelerate on markets where growth is high and in the field of direct insurance to reach our goal. Thank you for your attention. Jean-Laurent, thank you. Good morning all. I'm delighted to come and present today the results of AXA France and its business areas. I will begin by helping you find your bearings as regards AXA France. Then we will look at the yearly activity, and finally I will try to emphasize two specific pillars for transformation that are particularly significant for the future of AXA France. So first of all, a few bearings. AXA France is the insurance leader in France, multi-specialist, P&C, life, protection, health, bank, legal protection. We have 9 million clients. We use 3 major proprietary distribution networks, the first general agent network in the world, 900 specialized agents for estate and assets, and also then we have here savings and protection. Beyond this, we work with brokers and independent financial advisors in France. We represent 19 billion euros in revenue, and as you can see here, highly diversified activities. Our underlying earnings have grown by 7%. We have a strong domestic base that the group uses for its development abroad. Now, if we look at our different business areas for this year, we can say that we were quite dynamic in 2012. I would like here to take this advantage to salute and congratulate AXA France teams for their performance and engagement this year. Protection and health has progressed by 6% in sales due to collective corporate insurance, which crossed the stormy patches of the crisis very well. And then, of course, international employee benefits with our different partners, including MetLife. As regards individual insurance contracts, we launched a dependency product this year called Entourage, bringing in 16,000 new business. And also here the funeral insurance with family protection as well, where we guarantee, where we issue insurance hedging against or compensating any life accident. We also, in this field, have a very important role as regards the social protection aspect. Also, we have started to educate the public on how to control the levels of risk on television, in our advertisements, and so on. Jean-Laurent presented these numbers at group level. We have seen here a growth of 2% with combined ratio of 95.1%, up 0.5 points versus last year. This is the fruit of 2 or 3 years' work on of turning around the portfolio, where we were at 96.80% globally, and here for corporate it has gone down. So regarding our third major branch, which is here savings and retirement, we have had strong results in a very difficult context. Last year we started the year with the euro crisis, very low rates, competition from the Livret A, which is a French savings offer. And neither the preceding nor the current governments have been able to really stabilize this particular product. We here show a better reaction than the global market in retirement, whether individual or corporate, whether we're dealing with PRP or Madelin. We here have growth of 40% in our production, and as regards corporate retirement contracts, we can see very strong growth this year. Diversification strategy in favor of unit-linked products worked well, with an increase in sales of 7%. The success of selective IMO or the AXA Coupon Sérénité product, which brought in a unit-linked rate which is twice that of the market, which is at 13% versus AXA's 26%. Also, more globally speaking, in investments as regards savings are still fuzzy. We are still expecting the conclusions of the Berger Lefebvre report. We're hoping that there will be no major revolution in this particular area, but we can see that the concept of the Euro Fund is slowly but surely being depleted, and that we will need to invest new products. It is reaching its state of depletion because with ROIs that are low, mainly based on bond investments, these products do not have formidable interest are not considered as formidably interesting product areas to invest in. So we will need, of course, to cover this through unit-linked products or through other approaches to insurance contracts, which will give us an investment policy that is much more dynamic, much more aggressive on the market. To conclude, this year we have continued to apply an overhead reduction policy, 1/3 of the group's engagement, and we are today here in line with our objectives. This year we intend to drop these overheads by 30 million euros as an absolute drop in our overheads, which will help us absorb growth, inflation, and cover our required expenses. So we are here aligned with our objective of increasing competitiveness, and we will meet the targets of the roadmap we've set for ourselves. We are continuing also to transform our company with two major projects: how to improve the quality of service with the program AXA à votre service, AXA at your service. We need to make specific and transparent engagements. We also need to apply these to all of our networks. 3 of our major networks have already begun to work in this area, and we will continue in 2013 to present new demonstrations regarding our improved service engagements. Also, this, of course, involves continuous improvement approach, and for me, it allows me to continuously put pressure on the teams to make sure that they continue to improve the quality of the services made available to our clients. We have also sold here our service quality comparative internet site, which is called Qui a le meilleur service, who has the best service to provide, who is the best service provider, and we need to benchmark ourselves, and we need to accept to listen to the ideas and opinions of our clients. We can also here move into these different areas according to life accidents such as death or an accident, for example. We have had 1.2 million visitors on our site since the creation of the site, 5,600 suggestions of browsers, 28 companies, and 13 life moments were used as comparative basis. So, of course, this allowed us to benchmark our proposals. Many online services are available to improve our customers' experience. This is the client space, which is now known to approximately 30% of our clients today, where they can monitor the management of their automobile claims, their health contracts, and we will continue to improve this customer space. A few days ago, we have launched a new platform called Climat d'Entraide, which is a solidarity platform. developed by one of our staff members in the aftermath of an innovation challenge to bring together victim service providers, general agents, open also to anyone that is a victim or casualty of a natural disaster, and to help them go through these hard times and help them improve these situations as well. The second major transformation that we have at AXA France involves our distribution networks and the renovation of these distribution networks. This year, we have implemented a concept called Innov, which gives our employees an iPad to help them underwrite premiums at their clients, on their clients' premises during their meetings, and this gives them all the information they need to share with the client, as well as advice and simulation models to be able to help the client better understand. The deployment took place this year. This is also something that is a historical agreement with our general agents, because we've also decided to put our general agents at the core of this new policy, instead of creating a direct channel as some of our competitors, which exists through direct assurance in our group. What we wanted to do was to create virtual agencies for our general agents to supplement their physical and geographical agency. So we launched this last week on February 11, and this automobile product called Compact can be underwritten on the web, in the agencies themselves, and people can therefore follow that up with a visit to the agent's office or not. So this is full-fledged integration. We also have a specific distributor approach, individually per distributor, and the goal being to position Internet at the core of their offices so that this continues to grow. And we will continue to modernize our networks and give them a clear view of the future, or of what already exists, to help them develop. Thank you for your attention. By March 28th, we decided to give you a more detailed presentation on AXA France's results, so I'd be delighted to invite you.
Bonjour.
Good morning. I am now going to be talking about the group's asset management business. I'm not going to stop on the first page here, which gives you a report on AXA IM and AllianceBernstein, our two asset managers, but I'm rather going to talk to you about how our assets under management have evolved. Remember that we have in this area gone through a few years of difficulty. Both of these asset managers work on managing assets for insurance companies and also for third parties on a 50-50 basis. 2012 here is a rebound year for our asset managers as regards inflow, because it became positive again during the second half year at AXA IM, but in the last quarter at AllianceBernstein. You can see on this slide that assets under management have increased by 56 billion euros versus 2011, which here, of course, reflects the growth in the return to growth of the markets, but also this means that the group is managing 1,116 billion euros in assets under management, slightly up versus 2011. The group income is stable, up 2% published, minus 3% on a comparative basis, which is in fact the reflection of a drop at AllianceBernstein, with a slight drop in average assets under management. I here have already mentioned the inflow that you can see detailed here on the right-hand side of the slide. once again turnaround during second half year 2011 and over the last 4 months of 2012 at AllianceBernstein. If we now go on to underlying earnings, even though as far as assets under management are concerned, inflow is slightly negative, we can see that the underlying earnings are up 19% published data and plus 14% on a comparative basis. This is particularly true of AllianceBernstein, which of course contributes a very strong growth in the underlying earnings at AB, where we have a stable progression of 20% at AXA Investment Manager. The performance in investments for both of these asset managers has turned around strongly, which explains the positive evolution of the inflow, and we expect here to find positive flows in 2013. I will now comment the group's global performance in 2012. As Henri de Castro said, is the year of return to growth, both as regards group income and earnings. We can see here that the income has progressed by 5% published and 2% comparable basis, progressing 2% in life, particularly through high growth in Asia and the US, and up 3% in P&C, which is the result of all our geographies combined. If we now look at the operating efficiency results, remember that our AXA Ambition program had set as an objective a drop in expenses by 1.5 billion euros. In 2011, we saved 300 million. We decided to increase this objective to 1.7 billion by adding additional savings items on the acquisition cost of life insurance. In 2012, we were here able to reach 400 million in savings, and we now are left with 200 million of potential savings, additional potential savings between now and 2015, which in my opinion is a quite reasonably attainable objective. We have also invested in 2012 1.1 billion euros in the improvement of claims management platforms and support the modernization of our distribution networks, and therefore in 2013 we feel that we will be able to increase this pace to 1.2 billion euros and dedicate this money to new investments. Also in Spain, we have implemented a new claims management system in order to keep our clients informed of the management of their claim in real time by SMS and email, or once again to create an application for electronic underwriting for life insurance products in Japan. And of course, this involves accelerated investments as well, and control of our expenses. Here you can see the underlying earnings demonstrate results that are dominated by P&C insurance and protection and health, which represent nearly 3/4 of the results. Savings and asset management only 1/4. We can see here growth 13% in nominal and 9% in comparable. This is also the result of the activities in insurance and the net turnaround in savings and asset management. As you heard mentioned by Jacques de Vaucleroy, this also involves the life's results that has drawn the group forward, so to speak, and increasing as well the different results, including those of AXA Equitable. Now, after we take into account the realized or unrealized capital gains, we can here see a progress of 31% nominal, 28% comparable, and this is in fact the result of very strong growth in underlying earnings, but also a slight upswing in financial markets, which allowed us at the end of the year to have better results and less provisions for sustainable items. Net has grown by 44% net income if we take into account the realized capital gains, particularly from our divestments in Canada, Australia, and New Zealand, and the divestment of our interest stake in Nikon Life in China. We can see a drop here of 1%. But I think that excluding non-recurrent items, we must here see the progress of 44% as the most significant bit of information on this slide. Also, we can offer a dividend at 0.72. This result represents a change of 5.4% on the basis of the stock price of AXA at December 31. Therefore, the dividend is up 4%. Now, the amount proposed this year corresponds to a distribution of 40% of our adjusted earnings, knowing that our long-term policy consists in distributing between 40 and 50% of our results. In view of the return to growth of the group, we have gone back down to the lowest level of this range in order to be able to invest further in the group's development. This dividend proposal and progression is also made possible through the strong increase, i.e. of 11% of the accrued contribution of life savings and retirement businesses. Let us now look at our balance sheet indicators. As Henri de Castro was saying earlier on, we have further reinforced in 2012 the financial situation of the group and its solidity, with the shareholder equity up 7 billion euros versus 2011, essentially due to the combination of strong net income and the hike in net unrealized capital gains. Solvency I is the regime that is still used as a basis, with a ratio reaching 233%. The economic capital model prefiguring Solvency II is also here showing an improved operating yield this year, increasing by 23 points to reach 206%, a very comfortable level. Remember that these economic solvency ratios published for the most part are calculated according to the rules which are applied by each insurer and not necessarily harmonized at this stage if the preparation of Solvency II. Our gearing ratio drops 1 point to 26%, close to AXA ambition achieved objective of 25% between now and 2015. I would also indicate that our net financial debt was reduced in 2012. This shows here our asset allocation matched to the AXA balance sheet. These assets here are listed at their market value at December 31st, 2012. As you can see, our allocation is essentially dedicated to state bonds and other bond investments, because our investment policies is based on having assets which, in terms of their features and so on, are matched to our insurance objectives, which is why we essentially have bond-based investments. Furthermore, we have more invested in 2012 in corporate bonds than we did in states bonds that were very low. Our non-realized capital gains have strongly progressed in 2012, reaching 11.2 billion euros and 3.5 billion euros ex-balance sheet. As you can see, all the major asset classes here are considered from an unrealized capital gain standpoint, particularly our bond portfolio. On the bottom right-hand side of this slide, you can see that we here have significant positions in shares, and as far as shares and real estate are concerned, we have significant unrealized capital gains, which will help us transform these into realized capital gains in future financial years. And I will now return the floor to Henri Decazes for his conclusion. Right. So conclusion. It seems fairly simple. What could look like a stagnant net income, which is only due to the non-recurrence of exceptional items, must not mask the fact that, one, we have gradually solved all the issues relating to operations during the years of crisis, yielding less positive results than what we expected. I'm thinking about the U.S., I'm thinking about asset management, where today there's a very clear improvement of the performance levels, as we have shown you. Secondly, our solid balance sheet, which is further strengthened this year, and gradual return to growth in our income and earnings, allow us to look at the future and to produce and deliver the objectives expected within the framework of Ambition AXA, with a certain degree of serenity despite the degree of uncertainty in the economic context, particularly in Europe. This leads us here to propose an increase in the dividend, i.e. 4% versus last year, now at 0.72 cents. And look at the future with determination, because we are not underestimating the degree of efforts that we must continue to make. But also we need to say that we are serene in the way in which we approach the future. That's what I wanted to say. And now we have a Q&A session, and we have 20 minutes. If we need more, we will take more. Please, when you are given the microphone, introduce yourselves so that those who don't necessarily know you can recognize who you are. Carla for Jeffy. We can see that as regards general funds in savings and life, we can see a drop in inflow of 3.9 billion. Could we have details of the breakdown in this lower inflow? Well, you know, as this was underscored in the presentation, developing general funds is not generally an obligation, is not something that we consider as a requirement. And here we have, of course, margins that are weaker in this field. Denis, Jacques, what do you want to say about these global figures? And does Nicolas have anything to add on the French figure? As regards the total number, you can see a negative net inflow of minus 3.9 versus 3.7 last year. And obviously this demonstrates the results of accrued selectivity. Also, this is true in Southern Europe. I'm going to give the floor to Nicolas to give you more explicit information regarding France. But there is a global strategy, and then there were some phenomena of specific local markets, such as in Italy, where the general account net inflow was lower than last year. In France, our net flows are positive, but in these net flows there are very significant differences, particularly as regards retirement, where we can see very positive results, but individual insurance is negative in a Eurofund, or positive 400 million in France, but I don't have the breakdown per segment, and I can't find it, so I'll answer that question later. We must also say that this change is fairly widely deliberate. We have said that we will not invest more in these general fund activities. And the results were fairly negative. So today we are currently amplifying our strategy by putting more emphasis on unit-linked based savings and on protection and health. So for us, the fact that in a totally global inflow of 3.9 billion euros, there's a drop in the euro inflow is more good news than it is bad news. As a matter of fact, inflow goes from 3.3 to 3.9, which is approximately 20% increase in net inflow, and these 20% in increase are positioned on segments where the margins are better than the margins related to the general fund. Simply, globally speaking, as regards this strategy, this means that we are here going from one model to another, where for a long time insurers based their focus on a general fund, to now turn to an even more insurer model, where we cover protection, health protection in particular, and so on. I don't think that we can break the market down in insure, another less insure. Managing savings by giving more or less significant guarantees is in fact our core business. On the other hand, we can be intelligent about this and look at what serves our clients' interests better. Look at also to ensure that the margins that these products yield are interesting for the producers. So there are some products today, in view of the current situation, that are less attractive than in the past. I think this is how we should. Jack, you want to add something? I think that we shouldn't be binary in our approach here. The Euro Fund remains a valid answer, but not the only valid answer. As Nicolas has explained, particularly in France, we have a savings activity which can be covered by different products, such as unit-linked, for example, representing quasi 25% today. It's not the statistics that we see with every client. We can see different forms of investment where the pie is shared differently between new products and Euro funds. So we have to look at things from a general standpoint, and we do want to diversify our client approach because this is dependent on requirements. As regards the general fund in euros, we're going to be negative at 1.3 billion, positive 60 million with unit linked. But on the other hand, as regards retirement or protection / health, we are positive by 2.3 billion. So we can see here where the portfolio has shifted. Next question. Muriel Breman for Investir. I wanted to know what your opinion was on the current evolution in the on financial markets, if you think this is sustainable, and if you think you're going to increase the share of equity in your portfolio. We don't have a crystal ball. This is not something I'm going to go into, but the growth perspectives worldwide and the valuation of financial markets versus historical levels, I think that it is fairly clear that the yield / risk benefits here are quite positive for this particular asset class. Those who today manage our asset allocation know that this is based on assets and liabilities. And Dennis, do you want to comment on this particularly? We indeed have the intention of increasing our equity-based allocation. but this will not suffice to move the market along significantly. 3% is the current position. We may go up to 4%, so this will remain extremely low in view of our ALM constraints mentioned by Henri de Castries, and also because of solvency factors. Yvon Best Tribune, my question associated with the preceding one, how can we anticipate the breakdown in general fund assets next year? Because there will be even less state bonds, more corporate bonds. How can we expect to manage the assets in this general fund? I don't think that we should limit our analysis to the general fund, because this is not the only thing we're managing. There are also provisions that come from elsewhere, including unit-linked. Jacques, Denis? Well, if we take the general fund as a whole, what is life and protection, health, and P&C, the first thing that you need to see here is that our portfolio duration is greater than 7 years, which means that what moves in that portfolio is 1/7 every year. So here we have invested nearly 50 billion euros. And this is an average investment at 2.7%. And a predominant share, 40% of these investments are corporate bonds, but we've invested another further 30% in state bonds, and the rest in loans, securitization, and so on. 2013, we're not going to really change our allocation basis. We're going to continue to reinforce the share of corporate bonds and loans versus state bonds, but we're also going to continue investing in state bonds. And in 2013, we have an investment program slightly above 30 billion euros, slightly under last year's, but I think that we need to think clearly about the fact that we are here navigating on a super tanker, and that we here are investing wisely rather than creating major upheavals in the way in which we invest. Hi. Stan Caquier from TAC Press Agency for Envoyé Spécial. Mrs. Duflo asked vacant premises to be requisitioned and made available to the homeless. And I'm thinking particularly about whether you're going to join this as regards the building across the street where your vacant premises would be available. We're not here to increase our vacant premises, says Mr. de Castries. And of course here we have a frictional rate of vacancies. Thirdly, the building that you're alluding to is an office building, being transformed because asbestos is being removed, which took time before we were able to obtain the authorization to build and renovate. One of the minority owners was opposed to this work. This building for the moment is not a residential building, and I do not feel that the safety and security rules allow us to let people move in. Furthermore, we are a very important player in town housing because we here are a member of the Logement Français, a very high-level member, and this was developed closely with public authorities to help solve the issue of the lodgings of people who are facing difficulties. Benedetti, buongiorno, signori. Three subjects I would like to cover and get your comments on. In view of last year's positive results, your profitability objectives, your underlying earnings per share, and also your net income and your shareholders' equity, do you think that in 2014 you could once again return to the top tier of the range? And also you have a partnership with Montepaschi Bank, or you're a shareholder. Do you plan to increase the capital? And and this also means you could be diluted in Monte Paschi if the situation that we know of does occur in view of the derived transactions that show up on the balance sheet of this bank. Secondly, where do you stand on the other issues that you are working on? First of all, we are quite aligned with the perspectives of Ambition AXA. We are quite confident as to the fact that 2015 we will have achieved our objectives, but the past years have taught us all, you and us, that there can be high volatility in the economic context, unforeseen events, and I would be extremely cautious here, 3 years before the end of this AXA Ambition framework, that because we've succeeded in 2012, we will do much more than our current expectations. We're quite aware that our efforts will allow us to achieve our objectives. That's what we believe. But I think it would currently be premature to say more. As regards Monte Paschi, we are shareholders of the bank. We detain an important percentage. And of course, particularly a partnership in the development of life insurance and P&C insurance. This, in 2012, yielded exceptional results from a historical standpoint. And I'm turning to the table to those who are responsible for this particular partnership. I think that we obtained a result of 12 million euros. And since we only have half of this, it means that the bank itself had twice that much coming in, which means that this bank is developing strongly both in terms of volume and in terms of results. So we here do not regret the partnership that we've established with the bank, and we have excellent quality relations with Mr. Profumo and Mr. Viola, the new management team of the bank, and these are people we have tremendous respect for. Also, this bank has a past. As a shareholder, we have suffered from this past because the bank's stock price dropped, but we trust the new management team fully to leave these problems behind and and we believe that after the necessary restructuring operations, the bank will return to growth. As regards private equity, the discussions are ongoing. This business is growing well. It's highly profitable. This being said, maybe you are aware of the fact that in the construction of the round tables, the attractiveness and appeal of France is something that is challenged today by international investors, which is why we are continuing to discuss this topic at management level, serenely, quietly, and with everyone's best interest in mind. Who is going to take the mic first? Lionel Garnier, Le Revenu. I have 3 questions. The first involves asset management. Since we are currently witnessing a return to normal of inflow and higher profitability, what is your strategic analysis of your position at AllianceBernstein? Is this perhaps the best moment to change your capitalistic position? And also we have the impression that there is a return to consolidation as regards asset management. What is your position on this? And also there's a sort of ironic approach from analysts, strategists, investors, believing that we are in the near future going to face a bond market collapse. Also, as regards your advisory opinions, what is your position today, and do you consider this with a benevolent eye, or do you think this is not your problem, actually? Do you take the first question? I'll take the other two. As regards AllianceBernstein, we are delighted to see the evolutions that they have just known. And with 63% of the company is ours, this is, of course, a position that satisfies us. AllianceBernstein continues to grow its expertise, and this is something that we're delighted to see. We have no acquisition objectives for this. We're not going to reduce our interests either. And we believe that AllianceBernstein can now return to growth in a more diversified manner. As we have seen the fact that AllianceBernstein was extremely successful between 2003 and 2007 on large cap share investment mandates in the U.S., and this was extremely negative for the company as a whole. Now it doesn't have just one single engine. It has a 6 or 7 cylinder pack, and it is moving ahead much more strongly, but we have no position regarding the strategy for the moment. I am sure that this did not escape the attention of those of you who wrote it, but may have escaped the attention of those who didn't read the article. The position of AXA IM and AllianceBernstein in 2012 have made AXA the second inflow collector in Europe behind PIMCO. And the Financial Times wrote this as a form of free advertising here. And it demonstrates the competitiveness of these businesses. As regards the bond market crash, people are always very interested in bad news. I think that the best position is to stand back and look at this in a much more detached manner. There's an extraordinarily accommodating attitude of central banks, which have brought them to show the lowest value levels in their history, in this for the past 100 years. This phenomenon is not sustainable. These extraordinarily accommodating policies that some have called financial repression on savings accounts was geared towards the restabilization of interbanking markets, thus allowing banks to return to improved financial health. Seems to me that with the return to growth in large world economies, particularly in the U.S., are coming to an end, as is clearly demonstrated by the debate within the Fed's Council. So it is not unreasonable to me to think that long-term interests should gradually, except in the case of an accident, of course, return to their higher levels and restore their long-term balance. Now, if this return to growth happens gradually and without an accident along the way, it's far from being bad news for insurers. On the contrary, because insurers have huge savings accounts, and those clients who manage assets for management and who also have savings accounts would be delighted. So all gradual increase in interest rates is something that we would welcome with much joy. And then, of course, we would have to be looking at the pace with which this would happen. The second question was on CNP. The first observation I would make is that AXA's remuneration policies have never been violently criticized, and that our transparency on the topic has always been complete. We do not fear being transparent on this issue because we know how to work in moderation and with variability in mind. So the subject for us is not just an issue of transparency. It's an issue of where does the responsibility of the different stakeholders lie, and to better analyze things when transparency already exists, which is the case. How can we share responsibilities between boards of directors and other high-level management committees? And I think this is important because the shareholders meeting involves shareholders, but they also appoint the board of directors, of whom they expect that they challenge and survey the different directors themselves. This sometimes may lead to the creation of a certain degree of uncertainty. I'm not necessarily opposed to CNP and the fact that the shareholders meeting can take a stand here, but we must really look into how this can be arranged. I'm going to take a more French position on this topic. I observe that the majority of the listed French groups is detained by shareholders who are not French, which is great, and which, of course, demonstrates the gradual globalization of the businesses of these groups. But if the shareholders meeting will be given the freedom sometimes at some point to take a stand and criticize or pass judgment, then this may spread to other areas in the future. Scheherazade Daneshku, Financial Times. You have already alluded to this, but an American CEO has criticized the working method in France. Is he right, or is this an impact on the image of France, and is this a problem for French companies? Thank you, Scheherazade. I was able to explain this morning on the radio for BFM. I'm going to go back to what I said. This demonstrates three things. Demonstrates that Mr. Montebourg is not the only one who makes mistakes when he talks about the world of corporations. And unfortunately, and the French need to face this. This reflects how France is perceived internationally today. And we do not have the right to pretend that we don't understand this. The third point is that all of this confirms that there are several people among us who are quite right in fearing the level of productive investments in this country for the years to come, because the combination of a tax rate on corporations which is 1.5 times that of Europe, same thing for capital gains, declarations that sometimes exceed the actual thought of their speakers on specific situations. None of these points, without adding projects that are still being discussed by the Parliament, do not yield to a business-friendly environment. So much for that. Laurent Tegnal, Les Echos. How are you preparing to face up to the reform that will generalize health insurance, particularly as this gives much more favorable conditions to protection institutions? I think that we must reposition this reform within the context of the negotiation that occurred between the MEDEF and those of our unions who have signed the agreement. An agreement is necessarily an equilibrium. And of course, this involves trade-offs on both sides. The counterpart to allow greater flexibility for more restructuring is the extension of a certain number of warranties to employees who did not benefit from these in the past or who benefited from these in a different way. In this case, as an insurer, observer, and long-term player of the French economy, we consider that this agreement is a good one, because greater flexibility is, of course, supported by greater social coverage and improved social coverage. Now, there are two subjects, what will be the exact nature of the transposition and what will be the designation clauses involved. We've all listened quite attentively the President of the Republic when he encouraged the social partners to negotiate, giving us a literal transcription of these agreements. So we are expecting, we are hoping that the engagement that he made will be respected. As regards so-called designation clauses, what we would like to see come out of this is transparency and competition. Transparency in the way in which the coverage will be made available, and the competition between the players that may be in a position to make that coverage available. If these designation clauses were to be, how could I put this, were to lead to locked-in monopolies, then this, in our opinion, would not be favorable either to the general interest or to transparency, because I do not believe that quasi-monopolies or monopolies lacking in transparency are the best situations where we can improve prices or establish the right quality level for our services. Good morning, Noémie Serme, Dow Jones, The Wall Street Journal. I had a question on cost savings. You said that you identified 200 million in potential savings. Where are you going to make these savings? You were also talking about an investment of 1.2 billion euros. What does this investment correspond to? And secondly, could you give us a little more information on why there is a return to growth in the U.S. and why there is a return to growth on the asset management? I'm going to ask Véronique Weil to give you an answer as regards savings, and then Denis will answer the American question. Well, if you remember that when we launched the savings plan, we had planned 1.5 million in savings, 0.4 in acquisition P&C, and other on administrative expenses. What we were able to see during the project is that there were levers identifiable, such as IT, procurement, and operations, where we found higher amounts for potential savings. And 400 million, in fact, out of here we have 37 million in acquisition, in P&C acquisition costs and in administrative costs. And from that point on, we also looked at our life insurance activities, and we realized that there were opportunities there as well to reduce our acquisition costs in life, and we've reached approximately 80 million this year. So what is important is that we keep these levers, IT, procurement, and operations, offshoring activities, re-engineering as well, and also we can control our acquisition costs in P&C and in life, and this gives us 1.7 billion in savings for 2012. If I now look at investments, Denis mentioned it in his presentation. Our investment plan is circa 1.2 billion, And amongst these, we have 1.1 billion in technology. As Nicolas clearly said, we want to reinforce our digital and access capabilities because our clients want to have a different relationship with his or her insurance company, working with other industries, newspapers, banks, music. And so we want to give our clients the same opportunity. So we have decided to invest approximately a little over 200 million in investments that are particularly focused on digital. And we're doing this with our distribution networks. Nicolas gave you an example earlier on, saying that we want to be able to give much more performing tools to our distributors. We also want to allow our clients to interact with us as regards service activities, which are much more flexible and which, of course, reduce the number of paper, the amount of paper that we send them, and also give our clients the capacity of underwriting online or to obtain advice from the agent. So we have a breakdown in our investments according to these three areas. As regards to asset management, as I indicated earlier on, the fact that our underlying earnings have grown by 24%, and although the income has dropped by 3%, expenses have dropped more than the income. And it is this favorable shearing effect, so to speak, that gives us strong progress in our results. In the U.S., you remember that since 2008 we've had difficulties with our variable annuities products. These products in 2011 had brought with them 325 million euros in losses. In 2012, they were reduced to 28 million euros. And we have taken a certain number of decisions as regards the strengthening of our technical provisions associated with the behavior of the policyholders, which lead us to believe that the need to further reinforce these provisions in the future is lesser. Yes, go ahead. Christian Schuppert, Frankfurter Allgemein. I would like to ask you a question about Germany. The underlying earnings in life insurance dropped strongly in Germany. Why? And how do you compare your position today to your major competitor, Allianz?
Oui, j'ai pas beaucoup d'éléments précis. Je crois que.
Jack, yes. Well, I think that one of the reasons is linked to the fact that in Germany, valuable annuity products led to a fairly negative result in view of the high volatility of the markets involved. But as regards all the other segments of our life business, things are stable versus preceding years. Now, I must say here that these activities of variable annuities have been stopped. So there are no such activities this year, but these are the dregs of what existed in the past. And also, as regards protection and health, we've had strong results in it, and this also applies to you, unit linked. Now, as regards the comparison with Allianz, of course, we could spend hours on it, but in just a few words, what I think that can be said is that Allianz is a group that is much larger than we are, but we're filling in that gap little by little. In 2010, they were 40 billion. Ours was around 16. I do not have the gap, but they're still 40 billion, and we're now at 30 billion. We're slightly bigger in life insurance. They're better in asset management than we were over the past few years because they chose PIMCO as an essentially bond-based investment manager, and this, of course, has borne fruit, whereas our investment strategies in the development of asset management companies was more geared towards financial markets. But both groups have geographical positions that are close. There are differences here and there, but they're not major differences. And you will observe that the combined ratio of both groups in P&C is under 100, which means that both of these groups manage their P&C businesses quite rigorously. And you will also observe that as regards major industrial subjects such as regulations, we have very close approaches, and Alliance's approach to Solvency II is quite close to ours. Next question. Hello? Three information as regards your investments. People who are distributing AXA products today, have they been instructed to avoid proposing euro funds for investments? And you explain this indifference of clients by the drop in interest rates. And tomorrow, if these rates were to return to an increasing position, would you change your position as regards these products? Also, do you have any fears as regards Southern European country activities, and particularly as regards Italy? And also, you're saying that in France, the environment is not business friendly at this stage of the year. What are your fears, apprehensions perhaps, on what could happen, and what would be your recommendations as a consequence? On the first question, the answer is quite simple. What we ask our distribution networks to do is to give the client the best possible service as a function of the client's needs. And as Jacques said earlier on, there is no binary answer because we have estate situations, savings situations, where Euro funds are still a good solution, where a part of savings in Euros is a good solution. What we try and do is analyze our clients' needs, and what we see is that when our clients have significant savings, which is there to be invested in the long term, then there may be more attractive asset classes than simple Euro funds, where yield, due to the drop in interest rates on the market, is lower than it was in the past. That's the answer to the first question. So networks react as a function of what is at a moment in time the best advice to give our clients. But of course the goal of these networks is to maintain their customers over the long term. In Southern European countries, now I may surprise you, but no, we have no particular worries. Our activities can, in some places such as Spain, suffer from the crisis, where our benefits, our profits are dropping because clients have less and less warranties. But what we have observed in Italy and in Spain is that these countries are quite bravely implementing the structural provisions they require to return to growth. So in the medium term, we have no specific worries. Now, as far as the French situation is concerned, I think I've already commented, therefore I will add nothing. We will ask a last question because Emmanuel is telling me that we must stop. Okay, 2 questions. 2 quick ones. Hi, Giuliana Lici. Are you interested in the activities sold by Universal in Italy? We have nothing to add to the multiple declarations we've made on this subject. In other words, well, you know them because there are many of them. Delphine Deschaux challenge. I wanted to return to the issue of interest rates that you clearly demonstrated that a gradual return to growth in rates is good news, but brutal, unexpected hike would not be that welcome. Is this something that just came off the top of your head, or are you really taking this into account? Then as regards emerging countries, slide 12, where you demonstrate that the contribution of markets, high growth markets, has increased tremendously. And what would be the numbers here? And then a point for Jean-Laurent Granier. You're saying that AXA is currently number one among international insurers in Asia. What is your market share in the zone where national companies are prevalent? Thank you very much. Now, as regards your first question regarding interest rates, frankly, a recent financial history has demonstrated that you can never exclude any scenarios. When I say that a brutal hike would be less favorable than a gradual hike, this is truer for the economy in general than it is for us in particular, because this, in fact, could lead to tensions and upheavals. Gradual hike, when things are done gradually, there's less risk of accident or volatility. As Jenny Duverne reminded you of earlier on, the protection we have against accidents of this type is based on the quality of our assets and liabilities management. And here we manage our assets as a function of our engagements on our liabilities. And this is an indicator that we are analyzing quite dynamically on a daily basis. Yeah, so we have coverage programs, as Nicholas has just stated, but we're relatively comfortable with this. Jean-Laurent, do you want to answer regarding exposure to emerging economies? Yes, well, as it was said, we have a share in our revenue, which is now 20% from emerging economies, because we've changed our size in Asia. In the consolidated net income, 11% comes from Asia. If we add a certain number of other activities where we are minority stakeholders, the participation of Asia is even stronger, circa 20%. Today we are number one on emerging markets in over 10 countries, more particularly in Asia. We're number one in Hong Kong, particularly thanks to the acquisition of HSBC that has further completed the activities, the businesses where we were already present. We're number two in Singapore, but close to number one and very dynamically positioned. Our position on most markets is very dynamic, and the number of policies in insurance in general puts us in a position where we expect to continue this growth in the years to come, and particularly as regards savings and P&C, and P&C certainly also is a reservoir of profitability for the future. So thank you so much, ladies and gentlemen. We will stop here and have a good day all.